Hello and welcome to another Dolphin Financial Radio Show. This is the first show of 2022, and so we're going to do a special show on what our predictions are, financial predictions, for the 2022 year. And to help me with that, I'm going to bring in my sidekick for the day, Chris Kuntz. Chris Kuntz is an investment advisor representative at Dolphin Financial Group. He's going to join me today, and Chris and I talked before the show. We combined our top predictions for 2022. So we put a little thought into this. Now, if you guys are listeners to the podcast or to the video series on YouTube, you'll know that the last show, I'll put it up here, was analyzing how well I did in my predictions in 2021. So I hold ourselves accountable. Chris, a year from now, we're going to review how we did in terms of our picks. So we have a whole year to hope that these things come true. Or maybe not hope they come true, but hope that we are right. So, Chris, welcome to the show. How you doing today? I like your background, by the way.
Yeah,
Very
happy
festive.
New Year, everybody.
Yes.
Hopefully happy 2022.
Yes, hopefully you're a very cheerful 2022 background for
Yes.
the podcast listeners. He's got a festive 2022 New Year's celebration winter
Yeah.
wonderland behind me. Well, I have a
Terrifying.
mysterious sort of mystic fortune teller with the crystal ball again. So there's my theme. So we could see already how Chris and I differ. But we did come to some consensus here. And we're going to talk about the top 5 trends we see, financial trends we see in 2022, as well as how they relate to retirement. So let's start us off, Chris. Why don't you start us off, not in any order, but the first one we want to talk about, inflation.
Inflation continues. So we saw all the reports going into the holidays that inflation was setting records.
Right.
And I believe that's going to continue into 2022, at least for the first half of the year. I think that it's going to be hard for us to get control of that, and I think there's a lot of upwards pressure on prices right now, and there's a lot going into that, which I think we'll probably touch on a little bit as we go through here. But inflation is going to continue.
I agree with that. I mean, we had the highest cost of living increase in Social Security in 40 years. I mean, that's great, right? That's great. But we also saw the prices. Everyone knows it. Everyone saw the price at the pump. Everyone saw the grocery bill going up for the New Year's Eve
Right.
celebration. And you're thinking it's going to continue. I'm thinking it's going to continue. Now, originally, I did a show. I'll put it up here on inflation back when it was first getting started. And I said I agreed with the federal government. I think it was Janet Yellen at the time said inflation is going to be a temporary blip. So we're not going to know that until the end of this year. So I think that, and again, if I knew what was going to happen, maybe I'd be an economist, which I'm not. But I think that inflation will slow down throughout the year, but it's still going to be higher than average. That's for sure.
I mean, we've pumped a lot of money into the economy over the past, few years, and we haven't seen as much inflation as we're seeing right now. I think it's almost like a little bit of catch up to all the
That's true.
all the money from the stimulus that's been pumped in. We've been able to keep interest rates low, which I think has put us in a good position to deal with this inflation now. And that's why I'm hopeful that mid-year we'll start to see it taper a little bit. The
Yeah, that would be nice, but we could have a continuation
It's
based
hard
on
to say.
2021. I
Yeah.
mean, if we're playing catch up, we might have an entire year of inflation that's even higher than 2021.
Yeah.
That could be devastating, particularly for retirees, because a lot of them are on fixed income. A lot of them are on low risk investments or CDs or things that don't really keep up with inflation. So they'll probably get hit the hardest, I would assume.
Well, it's certainly hard when you're trying to plan for retirement. Um, what do you plan for needing for income? If you haven't, I mean, for retirees, I mean, that's the worst because you're already on your fixed income. But even as you're nearing retirement and trying to
Yeah,
plan for
you got to plan for
inflation.
inflation. Yeah, you
Yeah.
have to have a cost of living increase built in a retirement plan, or else I mean, that goes without saying, whatever inflation is. You
So
have
with
to.
record numbers, what do you use? Do
Yeah.
you
Well,
assume
what do you
six
use? Right.
percent inflation, or do you
Right.
assume 15% inflation? I mean, we've
Oh,
seen some pretty crazy numbers in the
it's
past.
happened. It's happened. I don't think we're
Yeah.
going to be there, but you never know. So we agree on that one. All right, let's go on to the next one. The Great Resignation continues.
Yes.
What do you think about the so for the viewers and listeners that don't know what the Great Resignation is, why don't you give them a quick little 10-second
Sure. The Great Resignation. People got used to staying home while they were either sick with COVID or avoiding getting sick with COVID, and they realized, hey, it's not so bad at home. I kind of like it here, and maybe I don't want to go back to the office to my low-paying 9 to 5 or worse job. And that's going to have some effects on 2022, I think. And it was interesting talking with you before the show. What does that mean? For me, I think it means that employers are going to finally have to raise their wages. I mean, and I've seen a little bit out there floating around about wages increasing this year for those workers, those non-retireds. Um,
Yeah, I
and
could
then
see
you had
that.
some thoughts
Yeah.
too.
Yeah, and I think one of the things I've noticed is that people are changing their conversation about retirement. Um, they, when people retire, typically, and you've seen this, Chris, when they retire, they're bored. A lot of people define themselves by their work. They get home, they realize their spouse isn't all that cracked up to be, right? Oh my
Ah,
God, go back to
I
work,
hope
please.
that doesn't happen to
But
too many, but
but for a lot of people, they realize, oh man, um, wow, this is different than I expected. So what happened during 2021 when people stayed home, they got a little bit of a taste of what retirement was like, and I think a lot of them are saying, I could do this. Maybe I can work part time. Maybe I'll retire early. I really liked it. Some might have said, well, maybe that's not for me. I'm going to continue to work. But I think the idea of retirement has shifted dramatically as a result of COVID, which was not expected. And I also think that people are starting to redefine what working and retirement are in terms of how they travel or things they do before retirement. It used to be you retire, then you go on your trips. I think a lot of people are saying, well, maybe life's too short. I lost some family. Maybe being at the office all the time isn't all it's cracked up to be. Maybe we take a trip while we're younger, and I could always go
work
back to work, and,
remotely
and
and
you know.
yeah.
So I think that you're right. I think the Great Resignation continues, and it's going to be people now going back to work, but I think they're going to redefine what that means.
Right.
It's not all going to be about, I'm not going back to work until you give me a raise. It's going to be, I'll come back to work, but I'm not working full time at the office. I want Fridays
Right.
at home, something like that.
Right. And I think I like the idea, like I was intrigued by the idea that people redefine retirement as almost like what we used to call semi-retirement
Yes.
is more like that is my retirement because I want to keep busy. And there's some benefits if you sit down and do some planning with it, because you can maintain your, or these are the conversations I guess you could have with your employer about health insurance, because that's a big
Yes.
cost if you retire early and you don't qualify for the government benefits. All of a sudden you got to start thinking about that private insurance, and these are ways to accomplish that.
Yeah. I'm excited about it. I think it's fun because a lot of times, I'm having this conversation anyway, and we get there in the end. But I like the idea of a proactive. It's great if because normally we say best time to start retiring is 20 years ago or planning for it. So if someone comes 10 years early and says, "Hey, let's start planning retirement," but I don't necessarily want to stop working. I want to semi-retire. That'll be a much more interesting conversation.
Yeah.
Also, a lot easier to plan for. I think. All right, let's move on to the next one. Number 3, real estate continues to be strong. You felt strongly about this. I wasn't sure. I'm not. I mean, we're neither of us are real estate agents. We don't
Yeah.
we don't offer guidance on buying and selling real estate, but it's an important trend because it is the largest asset for most people.
For most people. And I do feel I feel strongly. I don't think that real estate is going to continue to grow like it has in 2021. I think I was reading somewhere where the average increase was like 19.5% or
Yeah,
something
yeah,
last
it's
year.
it's it's really high.
Um, but I don't see real estate taking a step backwards. I think
Okay.
I think it's reasonable to expect real estate to continue to grow and at a pretty good rate. Not at the I think the average historical growth annually is like it's like 3 or 4%. I think it's going to be better than that. I think real estate is going to continue to go up. There's a lot of upwards pressures. Again, just talking about like inflation and having all the upwards pressures that you see there. Real estate's living in the same world. We have. They always talk about the millennials. They're a huge generation of people. I'm on the high end of them, on the older end of the millennials. And one thing they talk about is millennials wait to do everything. They do things later in life, and they're now saying that they're at the point where they're starting families and finding value in purchasing homes. Finally, and that has not been the case up to this point. And I
What a
think
bad time
COVID
to
again
want to buy a home, though, right? Right at the
COVID
top,
had
huh?
something to do with that. I mean,
Yeah,
because they were in their either their rented apartment or with their parents, and they're like, okay, I want my own. I want to own my own space that I can control. Um, but also they now have families and they see the value in having a real estate asset. So there's a lot of people joining the market from there. And then you have your baby boomers who continue to retire and downsize and also create a pressure on the real estate market that, after home construction, they pretty much stopped building for a number of years there. We're way behind on inventory. So it's like there is
yeah.
just a lot of need and not a lot of housing out there. So I can't see where real estate wouldn't continue to be a strong place to purchase. Or if you're a first time purchaser, I wouldn't sit back and wait. Interest rates are going up, and I think we're going to talk about that later in the show.
Yeah. Well,
Um,
I would say though that interest rates play a factor, regional plays a factor. You're talking about residential real estate. Commercial might be completely different.
yeah,
I
that's
think
true.
commercial will probably take a hit, like I predicted last year, just because people aren't working at the office
Yeah,
anymore, so
that's
they don't need that space. But yeah, residential, it's a tricky one. I think what you made your point though is that, hey, normally we're at 3 or 5% growth. We were at triple that, quadruple that. Um, don't expect that again,
no,
but don't expect it to be negative 20% necessarily. So I think the same about the stock market. Like we had ridiculous growth after we had that initial COVID decrease. Um, but we can't project that going forward.
no,
That's not reasonable. So yeah, we're not saying real estate's going to continue to be strong at that same double digit growth level, but it's not necessarily going to taper out real quick,
no.
like it did in '08 or 9, right?
Yeah, 8, 9. Yep.
Okay, let's move on to the fourth of five. This was the one I was pushing. Cryptocurrency adopted by banks. Now, in my previous predictions of 2021, which I'll put up here again, I said the number one trend was going to be cryptocurrency is going to go and be accepted by more and more people. This time, I'm predicting that cryptocurrency is going to be accepted by banks. Now, you worked in a bank for a while. I feel like you don't necessarily feel
I
so
just can't
confident.
believe it. It's a bold prediction. I can imagine it. I can imagine it. I think the day is coming. The future just comes so fast. I just don't know how to. I don't. To me, I just sit back. I own some cryptocurrency. It's a volatile currency. I just can't imagine having crypto in my checking account where it could be up one day and down the next. It scares me. It just scares me.
You know what scares me? This picture, the mystic behind me. Yeah, but I am. Yeah, it's slightly bold, but not unreasonable. So, if you remember, I think it was in 2019. I think so. The end of 2019, PayPal added cryptocurrency as an option for your money. So you put your money in PayPal, and that's you give transfer money between friends and so forth, and you just kept it in PayPal, right? There was no interest, and or very little. And then they said you can also keep it in cryptocurrency, and they
Right.
have like 4 different options to choose from. I think because it's a moneymaker for them, banks are going to have no choice but to do it. They're going to say, Why would I have a traditional bank account if I can go to this other place and have a checking account making interest, but also put it in crypto and move it and make it easy? I think just the money alone is going to force banks to do it. That's my prediction for 2022.
Here's where my head's at, because I'm interested in this because I was a big crypto denier for a long time. Like, this is a absurd idea. I can't see how this will ever stick. And now I mean, I embrace it and understand this is here to stay, and it's actually an asset to worth considering. Um, in the banks, the thing I've been talking about is I think the large institutional funds, the pension funds, the college, funds, once they start holding it in their billion-dollar, trillion-dollar funds, um, that'll stabilize the value because they are buy and hold
Yeah.
individuals,
Yeah.
and that'll make it more palatable to have in an account at the bank. So I think if you're going to
Yeah.
predict the banks are going to start accepting cryptocurrency and holding it, then you got to predict that the institutional investors will finally pull the trigger. And I think together that's completely reasonable.
And I think to take that one step further, I do think institutional investors are holding it. So that's giving it a little bit of credibility. But right before that, I have a feeling the banks are going to require the SEC to regulate it. And once the SEC comes down and says, this is how we're going to regulate cryptocurrency, it'll be very quick in terms of banking, that they'll adopt it. So I think that
Yeah.
could happen in 2022. I don't know.
I think those are all good things too. Those are all
But
good things. Yeah.
let's move on to the last one, which I know we both agree is going to happen in 2022. And that's volatility is going to increase in the markets. And we're talking all the markets: real estate, cryptocurrency, stocks, bonds, you name it. We're going to see some volatility.
100%. I think that there's no way to avoid it. I think one thing I touched on a little bit, but you talk about inflation, we talk about raising interest rates to try to combat inflation. All of pulling and prodding all of these mechanisms to try to manage the market is only going to make it more volatile.
Yes.
I mean, if there's one thing I've learned is that when we try to manipulate, it makes things bounce all over the place. And I mean,
And when right, you're hitting as soon as you start moving some levers, even a small tweak over here is going to way down the line is going to speed it up. And I think we made a lot of tweaks.
yeah,
And it on top of that, Chris, and this is retirement focused show. I think retirees are going to be the ones that get hit by the volatility the most because they're typically the ones that like the volatility the least. Right, as you get older, you typically like less volatility, although you can afford more volatility. Usually, the glide path indicates you take more volatility as you get older because your income's stabilized.
right,
But I think they don't like the volatility, and I say they, the boomer is going to be really in the middle of it. We're turning the tide where there's more boomers that are over 65 now,
right.
and they're retiring. And when you retire, you tend to fly to safety. You tend to go to safe route. So they're going to be pulling money out of the market, and that's going to drive some volatility, increase the movement of money. On top of that, you're going to have people like us that are saying inflation is going to kill us. We need to invest more, so we might buy the riskier assets because those will keep up with inflation. So we're going to be buying, they're going to be selling. It's going to increase momentum and volatility. I think this is 2022 is going to be where we see some volatility. It's not going to be this slow, steady grind up like we've been doing the last few years, which is I mean, it's predictable. I think it's predictable that we're going to have volatility. I don't think anyone predicted that after the COVID crash in January, February of 19 or 20, how we went down 35%. I don't think anyone predicted it would just go steadily right back up and not really have a big major blip. I mean, we didn't have many corrections at all since COVID.
No, it's been surprising. I think the hopeful thing is that hopefully the volatility will end on a higher note than it started 2022. I mean, that's my prediction is we're going to see a lot of ups and downs, but hopefully by the end of 2022 it will continue to be a strong if volatile market. The key is going to continue to be not predicting, but planning. How do you plan? Like, you can plan for a volatile market. You can take steps to both tolerate and know what your money's going to do in a downside of the volatility and on the upside of a volatility, and you can plan for what you're going to take out of the market throughout the year for yourself. Because in retirement, that's what you're doing, is a lot of times you're pulling from your investments. Well, part of that gets really scary when there's a lot of volatility unless you have a plan in place. So I mean, it's
Yeah,
going to come down to sitting down with somebody and putting a plan in place, whether it's your
not
spouse or a professional.
right, and not getting whipsawed, not selling in a panic mode, but more selling because that's your strategy,
Right.
or buying at the right time. It's never going to happen. But if you have a plan, I'm going to buy at these set times, then you don't really overthink it and make
Right.
that crazy decision, because I think there might be, I think you and I both agree, there's going to be some volatile moments in 2022. When they happen, no one knows, but it's better to be prepared ahead of time so that you're not panicky.
I
Because
mean, there's just so
that's
many
usually the
things.
worst.
We look at how this COVID variant came out on December 1st. By the way, I'm recovering from COVID right now. That's I'm in my office right now, quarantined at home with my family. It's been a
You look
lovely
pretty
Christmas.
good. You look better than
Um,
her, and you're
but
recovering.
yeah, right. But I mean, that variant came out. The first case was in December 1st. So in 1 month, look at how that's ravaged the country. And I mean, it's not this. They're saying this variant isn't as bad, and I'll test it wasn't as terrible for me. But that was a huge thing, and it had some impacts just in December on the market. And like you saw, the travel, the airlines have been pummeled recently because of this variant. And I think there's things like that you can't predict, that will come out in 2022. If we've learned anything since 2020 over the last 2 years, it's hard to predict what's going to happen, as far as health goes, as far as the health of our country goes. But then also we're running into another one of those political seasons, which
That's
gets
true. That's a really good point. We're going to have midterm elections in 2022.
yeah,
So that always adds a little uncertainty to the air.
a little spice.
And the markets do not like uncertainty.
Yeah.
So unless it's a clear indication of what's going to happen, there's going to be some volatility as a result, leading
Yeah.
up to the midterm election. So
I mean,
good point.
it's meaningful elections this year. I mean, every year is meaningful, but I think we'll have there'll be a lot of fear, and that creates volatility.
Well, speaking of fear, I want to end it there. I want to say be ready, because a year from now, we're going to be reviewing this. I will put this video clip up there. So if you said anything sensational, now's your chance to apologize. All right. Well, thanks for joining me today, Chris. It's a good show. I just want to remind everybody, we are investment advisors. We're financial planners. We focus on retirement. We're not saying these things are going to happen. Do not make any decisions based on what we're just saying. Just things are things to think about. Because if we truly knew what was going to happen, we wouldn't tell you. No, would we?
No. Yes. No.
All right. Thanks for a good show, and I hope everyone has a great 2022.
All matters discussed in today's show are for informational purposes only.
This show is not investment advice.
Dan Riddle nor Dolphin Financial Group are affiliated or endorsed by any government agency.
Investment advisory services are offered through Dolphin Wealth Management, Inc., a registered investment advisor in the state of Florida.
Insurance products and services are offered through Dolphin Insurance, Inc.
Dolphin Wealth Management, Inc. and Dolphin Insurance, Inc. are affiliated companies doing businesses as Dolphin Financial Group.
You should talk to someone at Dolphin Financial Group before implementing any of these strategies or ideas.